It's been a very tough year for local stocks. Most stocks on the JSE have endured very sharp declines in 2018. If you look at the market at an index level, it's on the cusp of a bear market in rand terms, and since January highs is in a bear market in dollar terms. So it's a very tough time for South African investors. Our 3M process sees us looking for mispriced quality, and we think the environment we're seeing currently, which is one of very low confidence, is one in which those kinds of opportunities are likely to arise. We think on the domestic front, there's several stocks that are trading at very attractive prices relative to what we think they're worth. And in particular, I reference the mid-cap industrials, which we think is a sector that is out of favor and not well owned. Consequently, we can buy stocks at very low valuations on low levels of earnings. So we're quite bullish about the long-term returns that can be derived from some of the local stocks that we own. More recently, we've also seen some large caps selling off, and we're finding some opportunities within that part of the market. In particular, I reference Old Mutual, which is the largest position in our funds. We think the share price currently offers a very asymmetrical opportunity, meaning limited downside and very healthy upside. We've continued to add to our Old Mutual position after Quilter was unbundled from the group. Global markets have performed poorly in 2018. The notable exception has been the US, and to some extent, the US has been decoupling from the rest of the world. But we have seen interest rates rising in the US, which typically would be indicative of a latter part of the economic cycle. And in particular, we've seen this weighing on emerging markets, and emerging markets have had a very tough time in 2018. We are selecting stocks carefully within global markets. As always, we're favoring the uncrowded, less popular parts of the market. This has seen us reducing our exposure in the US and increasing our exposure in places like Japan, the UK, and emerging markets. A good example of a recent opportunity would be Japan Post Insurance, a company that we think is incredibly cheap in an environment of zero interest rates in Japan, and would be exceptionally cheap in the event of any kind of interest rate normalization, an excellent long-term opportunity for our clients.